span p content div, it is equal to div GPT, line height, 0px, font size, 0px. Bitcoin investors expect futures volumes to perk up when CME Group Inc., the world's largest derivatives exchange operator, launches its own contract to wager on the cryptocurrency on Sunday. The second US Bitcoin futures launch is seen as another step towards big institutional investors warming up to a volatile asset that had until recently been accessible only via largely unregulated markets. Document right, if ISIS banner is equal to free and displaycon banner is equal to 1, document right, googleted CMD push, function, googleted define out of page slot, /6516239 out of page _1x1 desktop, div GPT at 1490771277198 add service, googleted poobards, enable sync rendering, googleted enable services. Like the futures contract launched last week by rival KBO Global Markets, CMEs will be cash settled. But it will be priced off an index of data from several cryptocurrency exchanges, instead of just one. The CME contract is based on a broader array of exchanges, said Matt Osborne, Chief Investment Officer of Altegris, a $2.5 billion alternative investments provider based in San Diego, California. So there is a possibility that the CME contract may generate more interest and more volume. The January CME contract will trade on. Bitcoin has drawn attention for its eye-popping price gains, but it is also notoriously volatile. Bitcoin exchanges and digital currency wallets meanwhile have struggled with issues like outages, denial of service, DDoS, attacks and hacks. Bitcoin hit another record high on Friday near $18,000 on the Luxembourg-based Bitstamp platform, and has soared roughly 1,700% so far this year. Chicago-based KBO's Bitcoin futures surged nearly 20% in their debut on Monday, and more than 4,000 contracts changed hands by the end of the 4:15 p.m. EDT settlement. But the trading volume in the one-month contract, which expires in January, fell to just around 1,500 contracts the next day. By Friday, volume had stabilized at roughly more than 1,000 contracts. In contrast, trading volume in the KBO Volatility Index futures typically runs in the tens of thousands to more than 1 lakh contracts, market participants said. The decline in Bitcoin futures volume had been expected, analysts said, given concerns about the cryptocurrency's underlying volatility. And discount brokerage TD Ameritrade said on Friday it would allow certain clients to trade KBO Bitcoin futures from December 18, pointing to a potential pickup. The futures contract price has declined more than 5% since its launch on December 10. Some investors believe the CME Bitcoin futures could attract more institutional demand because the final settlement price is culled from multiple exchanges. The KBO futures contract is based on a closing auction price of Bitcoin from the Gemini exchange, which is owned and operated by virtual currency entrepreneurs and brothers Cameron and Tyler Winklevoss. To be sure, the general sentiment in the market remains one of caution, and this has been reflected in margin requirements for the contracts. In the futures market, margin refers to the initial deposit made into an account in order to enter into a contract.